Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into a report from Under Armour, and let's just say their financial moves are a little like trying to run a marathon in their shoes after leg day, a bit of a stretch. But before we jump in, if you are interested in learning more, join our Discord channel. The link is in the description. So what's the scoop? Under Armour has just filed an 8K report, which is basically a company's way of shouting, hey SEC, look at this important stuff happening right now. In this case, it's about new debt, some financial maneuvering, and how they plan to handle some upcoming bills. We're talking about millions of dollars, so yeah, it's kind of a big deal. Let's check it out. This Form 8K tells us about some important events Under Armour wants its investors to know about. The date to keep in mind is June 16, 2025, because that's when all this happened. In this filing, Under Armour is letting everyone know about an agreement that involves borrowing a substantial amount of money and a plan to deal with existing debt. First, let's talk about the credit agreement. A financial agreement Under Armour made. Think of a credit agreement like a credit card, but instead of a few $1,000s, there's million or even billions available. Under Armour has what they call an amended credit agreement. It's like they already had a credit card and now they're changing the terms to borrow more easily. They've made amendment number 7 to their existing agreement. This happened on in June. It changes the old agreement they had since 2019 with JP Morgan Chase Bank and other lenders. All these updates are called amendments, basically tweaks to the original deal to keep things flexible. The new deal, this amended credit agreement, lets Under Armour borrow up to $1 billion, but there are some key changes. One big change is pushing back when they have to pay it all back. The maturity date, like the due date on your loan, has been extended from roughly the end of 2028 to mid-2028 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 to mid-2030. That gives Under Armour more time to manage their money. They also changed some of the fine print about how much interest they pay and rules they have to follow. One detail that stands out is about getting a little leeway, a step up, if they buy another company for more than $100 million with cash. Basically, they get to have a little more debt, a little more flexibility. This could mean that Under Armour is looking to grow by buying out another company. Now to the cost of borrowing. The interest rate, meaning the cost of borrowing, depends on a few options. There's a base rate or a term rate plus an extra percentage, what they call an applicable margin. The margin changes depending on how much debt Under Armour has compared to their earnings. They can pay relatively a little if their ratio of debt to earnings is low, or relatively much if they have a high debt load. The commitment fees, what they pay to have the credit line available, range from 0.5% of the unused credit. This loan is secured if they don't pay back. The bank has claim over Under Armour's assets. Pretty much everything Under Armour owns acts as collateral, but with some exceptions like real estate and stock from certain subsidiary companies. If Under Armour gets a good credit rating from 2 rating agencies, they don't need to provide the guarantees and collateral anymore. There are rules in place about what Under Armour can and cannot do with its money. These are called negative covenants. They stop Under Armour from doing things like taking on too much debt, paying out too much money to investors, selling off important assets, or making big investments without careful thought. They also have to keep to certain financial ratios, basically certain ratios that limit how much debt they can have compared to how much they earn. Currently, the ratio is 3.25 to 1.0. They can increase this to 3.75 to 1.0, though there are of course penalties if Under Armour breaks the rules. These are called events of default. That includes not paying back the money, breaking promises, or facing bankruptcy. If any of these happen, the lenders can stop lending money and demand immediate payment, which will kill the company. This section refers back to the first one as it contains the information about Under Armour taking on a direct financial obligation, that $1.1 billion loan. Here, Under Armour is talking about offering some new senior notes, which are basically bonds to raise $400 million. They want to sell these notes privately to what they call qualified institutional buyers. These aren't your everyday investors, but big institutions that are assumed to know what they are doing. Under Armour plans to use the money they raise to pay off existing debt, specifically $600 million of senior notes due in 2026. So they're planning some financial juggling. Get new debt, pay off old debt. They say that it's not guaranteed though. They can't promise that they'll actually sell all the notes or that the deal will go through. Under Armour also had to add a disclaimer that this announcement isn't an offer to sell anything, it is more of an FYI, for your information notice. This is a caution that any forward-looking statements, meaning any predictions about the future, are not set in stone. They're based on what Under Armour believes will happen, but things could change. Stutter now. What's my take on all of this? Under Armour is basically refinancing debt, pushing back when they owe money, which gives them more breathing room. The fact that they're willing to take on more debt to potentially buy another company indicates that they see opportunities for growth. Overall, it seems Under Armour's financial team is actively managing their debt and positioning themselves for potential expansion. While there are risks involved with taking on debt, the company seems to be handling it strategically. The company is betting on new debt to grow the company. Alright, that's our breakdown of Under Armour's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. And if you want to talk about Under Armour and other things, join our Discord. The link is in the description. Thanks for watching. See you next time.